Dan, thank you so much for joining us. It's great to have you back on the show. I believe the last time we spoke was when PayPal went public and spun off from eBay. So it's obviously been, there's been a lot of excitement in your neck of the woods since then. The pandemic has led to unprecedented changes in our behavior. What are you seeing in terms of spending patterns and usage and how that's changed over the last 8 months?
Yeah, I don't think it's an exaggeration to say that the pandemic accelerated the shift to digital by 3 to 5 years in 3 to 6 months. It's not even hyperbole, it's just the math of what we're seeing. So you are seeing a huge shift from physical to digital. And it's not even just that shift from physical to digital, but even in store has gone more digital. So you're seeing a blurring between online and offline. Obviously, more and more people are shopping online, but now even when they're going into the store, they don't want to touch cash anymore. So they want to either do contactless cards or QR codes. And the other thing that you're seeing is that 40 to 70% of consumers don't want to touch cash anymore. So you're really seeing a decline in the usage of cash, which is why you're seeing an explosion in digital payments.
Could this lead to the disappearance of cash, would you say?
Well, I think a lot of people have predicted the demise of cash and have been wrong over the years, but there's no question that the use of cash and the prevalence of cash in transactions is dropping somewhat precipitously. And whatever that trend rate was, it's now a much more accelerated trend.
So what are you expecting to see then as we head into the holiday season?
Yeah, well, I think there are a couple of different things that we're going to see. First of all, you've got over 50% of the population that is concerned for their health about going into physical stores. By the way, that was a survey we did pre all of the explosion of the pandemic here in the States. So that's probably a much higher number. So people are going to move their spending online. And if you look at 18 to 55-year-olds, about 75 to 80% of them, so it's a huge proportion, say they are going to do substantially all or at least half of their shopping online. So you're going to see a dramatic increase from people shopping in store to shopping online. You're also, I think, going to see more of a spread of the holiday spending. You know, before it was very peaked during the Cyber 5 from Black Friday to Cyber Monday. That's going to be, I think, elongated because the logistics of distribution are such that retailers are trying to spread that as opposed to have it peaked. And the final thing that we're seeing now, which I think is really encouraging, is 2/3 of Americans want to shop at small businesses. And that's really encouraging because small businesses have really suffered during the pandemic. And I think a really interesting fact, Emily, that I love seeing is that as small businesses have moved digital, the sales that they're seeing have gone dramatically outside of their local market. So when somebody puts in PayPal for a small business, 75% of their sales are outside of their home state. That's a pretty remarkable occurrence. So small businesses are dramatically increasing their addressable market.
So what is all of this telling you about the health of the American consumer? Obviously, we have been in a recession. A lot of people have lost their jobs, and yet there's also this increase in activity online.
Yeah. Well, I think we're clearly seeing more Americans than ever before worried about the state of their financials. You know, the pandemic, in my view, just exposed more evidently the trends that you had almost 2/3 of Americans struggling to make ends meet at the end of the month pre the pandemic. So we are living in a time right now where people are really struggling to make ends meet. And this pandemic has only heightened that and brought more attention to it. I do think there are ways that the government has weighed in to try to help. I think we need to do more of that going forward. Certainly businesses like PayPal have weighed in to try and help as well. But we shouldn't underestimate the stress that the American consumer is under.
Now, the pandemic has thrust this conversation about working from home, more flexibility into the spotlight. You're at home, I'm at home. How is this changing how you think about your office footprint, knowing that if a vaccine becomes available, we're still looking at least the middle of next year at the earliest?
I think that's right. From our perspective, you're probably looking at the end of the summer into the fall before the vaccine can really take enough impact, if enough people actually do take up the vaccine, which we're hopeful about. But I don't think we're ever going back to what was. I think we'll go into a new normal. And that new normal, based on what we're seeing and as we think about the future of work, is probably going to be some hybrid of people continuing to work from home and coming into the office, maybe working from home 2 to 3 days a week and in the office, 2 to 3 days a week. Some people will forever be at home and others will be more in the office, but the vast majority will be some kind of 3-2 hybrid, I think.
Now, all eligible PayPal account holders can now buy, sell, and hold cryptocurrency, which with a purchase limit of $20,000. What kind of demand so far have you seen?
Yeah, well, we knew we were going to get high demand because we do market research on this before we introduce any product or service. And we try to work hand in hand with regulators to assure that anything that we put into the market around cryptocurrencies was safe and secure and easily understandable by our consumers. But, the demand has been overwhelming for it. We had somewhere between 2 and 3 times what we expected on our waiting list. I think the really interesting thing that we talked about is not just being able to buy, hold, or sell cryptocurrencies, but early next year, we're going to allow those cryptocurrencies to be used as a funding instrument, just like a credit card or a debit card or cash in your account, to be able to purchase at any of our 28 million merchants around the world. And I think that will fundamentally bolster the utility of cryptocurrency, really moving it from kind of an asset class today to more of an ability to use it in everyday transactions.
So how long then do you think before crypto goes mainstream? Or do you see that happening now?
Yeah. So I think there are 2 things that are going on. One, as we talked about before, you're seeing the demise of cash, and you're seeing more and more digital forms of payment and forms of digital currencies. There are 2 forms of digital currencies that are very different and distinct from each other. The first are cryptocurrencies. They're not backed by a fiat, government currency, but as we can put more and more utility around those and take advantage of some of the modern technology around that, I think working hand in hand with regulators, we can increase some of the utility of payments and transactions. The other is central bank issued digital currencies, CBDCs, as they're called. And I think, based on my conversation with regulators and presidents of central banks around the world, that's no longer a matter of if, it's a matter of when and how they begin to issue CBDCs. And they're exploring that very seriously. There are some trials underway. But I do think the intersection of digital currencies and digital wallets like PayPal and Venmo are a natural.
Bitcoin has been on a bit of a bull run, in part because of the PayPal news. I wonder what you see the biggest risks being. Obviously, there's government acceptance and regulation, which we discussed. What about security? What are the things that could prevent cryptocurrency from getting to the point of being truly mainstream?
Well, I think there's some base foundational elements for any type of digital currency or payment financial instrument to gain mainstream acceptance. Well, there needs to be trust. I mean, that really is the foundation of the entire monetary system. Trust in the value of that underlying asset and currency, and that trust comes from security, which is incredibly important and paramount. It comes from regulatory oversight to be sure that it is used for the appropriate purposes and not used by cyber criminals, et cetera. And finally, that your privacy as an individual is respected. And I think those are three crucial things. And I think it's one of the reasons why we introduced cryptocurrency the way we did, hand in hand with regulators, putting it onto the PayPal platform so that we could assure that security, that trust, and that we could work, again, hand in hand with regulators.
A lot more services are adding the buy now, pay later option. There's Afterpay, there's Klarna. PayPal is now adding this to its wallets. Does this at all concern you that it means more people will spend more than they should right now?
I don't think so, because I think the way that we at least are doing this is that we're assuring that somebody has the wherewithal to go and do these kinds of purchases, just like we do today in any of our credit offerings on PayPal. You know, this is a responsibility we take quite seriously. But one of the things we do, Emily, that's very different than others, is that we use our own proprietary modeling to look at this. Many people look at just FICO scores. We look at a lot of our own modeling, the history that consumers and merchants have, and base credit decisions on that. But I think buy now, pay later gives consumers a ton of flexibility. I love our value proposition on that. We can offer it to merchants without any additional fees and give consumers flexibility to pay in 4 equal interest-free payments, which I think should be helpful for consumers in this holiday shopping time.
So you and I last spoke when PayPal went public and spun off from eBay. It's been a few years since then. Where do you see the innovation coming in payments over the next few years?
There's no question in my mind that as we move into the digital economy, digital wallets are going to evolve substantially. And we are putting a tremendous amount of investment in the past year and next year into transforming both our PayPal and Venmo apps into much more expansive everyday use cases. So they're not just going to be for checkout online, but they will be for checkout online and offline. But they will also include financial services like being able to directly deposit your check onto the platform, savings capabilities, investment capabilities, taking all of the capabilities from our Honey acquisition, shopping tools, like what's your wish list, price monitoring, coupons, deals that can be offered directly to you, and putting all of that capability into our digital wallets, because that's what people want to do right now. They're using it in the digital economy, and our services and products need to expand dramatically to be able to serve our 360 million consumers today in a much more expansive way.